Hi. So, good evening. Today, I'm going to be answering some questions. So, it isn't just, it's basically first time buyer questions. I'm going to start with shared ownership questions. Then, I'm going to go on to right to buy questions. Then, I'm going to go on to some first time buyer questions. If you've got any questions yourself, please put them in the comments and I will, by all means, answer them as I go. So let's go. Let's start with the first shared ownership question. So first client question that I received is, can you explain how shared ownership actually works? So shared ownership is when you own part and you actually rent part. So when you're going to buy a property, how it would work is they'd have to work out your affordability on basically when you can rent, as in afford to pay part of the rent and afford to pay part of the property. So for instance, if you actually had the affordability to buy 50% of the property, then you would be paying rent on 50% and you would be paying the mortgage on 50%. So that's how shared ownership works. Right, what is the smallest share you can buy and how does it work? Okay, so with shared ownership, so as I've mentioned before, I'm going to do some shared ownership questions, then right to buy questions, and also some first time buyer questions. So please feel free to pop your questions in the chat. As I always say, all of my TikTok lives are also recorded on YouTube. So on YouTube, you'll get the full hour or however long it is. And obviously on TikTok, you'll get it live and then the recording will be the highlights. So just to make you aware. Right, so the next question is, so the smallest amount of when someone's done a shared ownership before has been 12.5% that I've ever seen. So they've actually purchased 12.5%, and then the rest of it, which is what, 87.5 would be rented. So what they'd do is they'd calculate how much rental you have to pay, which would be 100%, and then they'd pro rata it down. Right, can I get a bigger share of the property later on? How does that work? Right, so with shared ownership, you can actually staircase. So what I mean by that is, say you started off with 20% and then in a year or 2 years time, you decided that you wanted to buy more, you could afford to buy more, you know, your salary has gone up, you've paid off your credit commitments, you've got a higher affordability, then what you could do is you could actually staircase. So you can staircase two ways. Now, staircase is when you own a part of it and then you buy some more. So you're basically increasing the amount of the property that you own. And as you say, if you own 20% and then you bought another 10%, then you'd now own 30%. So instead of originally you were paying rent on 80%, now you're only paying rent on 70%. So the majority of people, and that's what I recommend, is maybe over 5 years, you try and keep on staircasing, buying more and more and more. And then in the 5 years, you buy the whole thing. So you now own 100%. You don't own it completely. You've just got a mortgage that is for 100%, as opposed to, having some rented and some not. Right, the next shared ownership is, what are the pros and cons of shared ownership? Is it worth it? Now, the clients that I've done shared ownerships for have literally been for people that are looking to buy in a particular area, but their budget doesn't allow. So I've done for people that that wanted to buy in Canary Wharf, for example. They wanted to buy quite close to work, but they wouldn't have been able to afford 100% mortgage, or put down the deposit and pay the mortgage. So they've bought, maybe 40%, and then the other part, 60%, is rented. So the pros and cons are, the cons are you do have to pay rent, there's service charge, there's ground rent, so it can be quite costly, but then it gives you the opportunity to move into a position or into a property that you wouldn't always necessarily be able to afford. When you are working out the affordability, you do have to take into consideration that that you will be renting and buying. When if you're a standard first time buyer, if you're renting, what we can say is on completion, when you've actually bought the property, you'd only be paying the mortgage and not renting anymore. So those are kind of the pros and cons of it. The next one is, do I have to pay rent as well as a mortgage? Yes, you do. I already own a flat, but I still want to get a right to buy property. Right. Normally, it depends on the scheme. The majority of schemes want you to be a first time buyer. So you just need to find a developer who is willing for you to buy shared ownership. But normally, if you already own a flat, if the flat you own is a buy to let and you want to buy residential, then that's slightly different. If the flat that you own is your residential and you want to buy a shared ownership as a buy to let, then you're going to have a bit of difficulty, or quite a lot of difficulty, to be honest. Right. What happens if you want to sell your shared ownership later? Now, what I always recommend is people keep on staircasing, buying more and more of the property. And then once they own the whole lot, it's a lot easier to sell than if you're trying to sell a shared ownership, i.e. if you only own 50% and you want to sell, the majority of times you have to go back to the shared ownership company, the developer that you were originally with, and they're more likely, you have to give them first refusal. So that's that. Right. How can I do home improvements if I only own part of it? Again, you will need to ask them. They may give you permission, they may not. It's purely in their hands. Are there special mortgages for shared ownership? Yes, there are. There are special ones. And if you DM me, if shared ownership is the one for you, we can kind of go from there. What happens if you can't afford the rent or the mortgage anymore? Then unfortunately, it's the same with all situations. When you buy a property, you'll unfortunately go into arrears, and what happens is, they will, take you to court, ask you to sell the property in order to pay the bills. But you might be able to go on a payment plan, possibly go on interest only temporarily. They do want to work with you. They don't want you to lose your home. So always talk to lenders as soon as you realize that you can't afford to pay the mortgage. And, they will try their best to be as flexible with you as possible. So those were the shared ownership. I have got some right to buy questions, and I've also got some first time buyer questions. But what I will do is I will see the questions in the comments first, and then we'll go back. So the very first question I have got is, we are in the process of buying a home. That's great. Are you answering questions? Yes, I am. If you put a question in the comment. I would like to get a mortgage, but I don't have a deposit to put down. What are my options? Okay, so basically, sorry, let me take a sip of drink. Right, when you're looking at 100, so this is called 100% mortgage when you're putting in no deposit. So you've got a couple of options. Option number one, obviously, if you're a right to buy client, and a lot of mine are, you don't need a deposit. 100% of the discount can be used as the deposit. That's option number one. Option number two is a guarantor mortgage. So what you can do is maybe your parents or your children, depending on the situation, can put down a second charge on their property, like an IOU, which represents a sum of money that can be used as a deposit for your property. That's another one. There's also another type of mortgage that if you've been renting for more than 12 months and you can prove that you pay your rent on time, that kind of thing, there is a special mortgage that is also available. But with the 100% mortgages, you need to have the affordability for 100%. That's the good thing about having a deposit. You only need affordability to, have 90% or 80%. When it's 100%, you need to be able to afford to pay 100%. So even if they put like an IOU to represent, say, 25% as a guarantee on your property, they're still giving you 100% mortgage. So based on that is why. They also, at the moment, there's a couple of lenders that do offset mortgages. So that is when they offset your savings against your actual mortgage. There's some where if your whoever is helping you, parents for this example, don't want to put a second charge on their property, they can actually move their savings to the same bank lender that you want to get your mortgage, and then it's sitting there, it is getting interest and everything, but they're not allowed to move that money out of their savings account until you have remortgaged off the 100% mortgage. So I hope that helps. We are looking to buy and have a deposit, but I have one default, a few missed payments. Is this possible? Yes, it is. Basically, when it comes to your credit profile, they will do their internal credit score, which I mentioned before. But what they also will do is they will increase the interest rate, the deal that they're offering you if you've got default or missed payments and things like that. And it does depend, are the defaults 6 months old? Are they 36 months old? It all does depend. So if it makes sense, DM me and I'll go through your whole profile individually and talk to you on a case-by-case basis. But for the purpose of the video, yes, they will. It just won't be the best interest rate that I could get if you didn't have defaults and missed payments. Would you recommend a new build for a first-time buyer? It really does depend. There's a lot of people out there that are buying new builds. What I would do is I have got a checklist, and I will post this up, that you can do. And when you actually view a property, be it a new build or be it a standard that's been lived in first home, I have got checklists of what you should do, what you should ask for when you go to view the property, what things you should find out. With the new build, is it a flat? Is it a house? You need to look at service charge. You need to look at ground rent. If it's a flat, you need to look at the length for the lease and that kind of thing. So just make sure that you do your due diligence. Oh, and the other thing is, there was one new build that I had with a client, and they actually, it seemed a bit pricey to me, but they loved the property. So we went ahead, and then when it got valued, it actually got down valued. So the bank actually said it wasn't worth what the offer that the client had accepted. So they said, we will still lend to you, but you need to knock 20,000 off it. So the client actually went back to the new build developer and said, I can only get it if you actually decrease it by 20,000. And they actually did. So that shows that they knew they were, trying their luck by overselling. So it really does depend. Sometimes when lenders downvalue your property, that means they go and value the property, and they value it for less than what what offer you've agreed on it. It sometimes may help. I think it was 20k less, so they actually agreed to 15k less, and they gave them a parking space, and that kind of all worked out. So hopefully that helps. Does being in an arranged overdraft? Yes, it does. It does. Do you know what? The two worst things when I'm trying to get mortgages for people is, one, if they're living in their overdraft, it really doesn't look good. Lenders just see that as a red flag that they don't know how to manage their finances. The second thing is car finance. That really can go against you, especially if your car finance is larger than your actual income. So you've got to look at the debt to income ratio, and then also, if you've maxed out your credit card, you really need to look at your credit utilization. So that's things to be aware of. Oh, sorry about that. Right, the next is, okay, so I've gone through some of the questions that have come up. I will go back to my original questions. So I've talked about all of the shared ownership questions, and then the next set of questions is the right to buy questions. Now I will go back to, so carry on in the comments putting questions, and I will come back to those as they come. And for now, I will go on to my client questions that I've promised that I will answer. All right, so the first right to buy one is, can you explain how right to buy works? I'm so confused. Okay, that's not a problem. So basically, the way right to buy works is depending on, i.e., if you've got a house or a flat, Also how long you have had your tenancy agreement, and also when you applied, because the rates up until the 20th of November 2024 were one rate, and then from the 21st of November up until now are another rate. For example, if you were able to get the maximum discount, that's the other thing. When you're calculating the discount, it does have a table there, and it does say, you know, you can have up to 70% of the value of your property. The thing is, if 70%, and you applied either the 20th of November or before, if 70% is more than 136,000, they will cap it at 136,000. Um, that is basically the ceiling of what your discount is allowed. So that's that. And once you know what your discount is, that can be the deposit. So as long as you find the right lender, you can use 100% of the discount as the deposit. So what I mean by that is, if your property is worth, say, 300,000 and your discount is 100,000, you would, when you're applying for the mortgage, you put in that you're buying it for 300,000, you're putting in a deposit of 100,000, and you want a mortgage of 200,000. I have done videos on it, so please check those out. The next one is, how do I find out how much of a discount I'm getting on my council house? Right, there are calculators that you can use, and basically they will ask for your whether it's a house or a flat. They will ask, what else do they ask? They'll ask whether it's, if it's the 20th of November or before, they'll ask, is it outside London or is it inside London? If it's the 21st of November and like up to now, they will ask, you know, what region it's in, and depending on that and the length of tenancy, it will calculate your discount for you. Right, what happens if your council says your property is worth more than you think it is? Right, I'm getting that a lot. So basically, if they say it's worth more than you think it is, you can dispute it. You can, when you get you can dispute it as soon as you can have a conversation with them straight away, and ask after the valuation what they think. You can ring them up, ask them what they think. You can wait for the section 125 and ask and once you get that, it will refer you to the district valuer, and then you can dispute it. The only thing I would warn is that if you are not happy with the price they recommend, and then they do an independent valuation on top of that and actually value it higher than what they originally said, then you're kind of in trouble, because whatever the last valuation is the one that stands. The other thing is, sometimes when you get it devalued, they still don't change it. I once had a client, and they went and got it revalued, and they didn't use the district valuer, they used a completely independent person, a structural conveyancer, and a structural surveyor. And basically the surveyor valued it 35,000 less than what the council was saying, but the council wouldn't budge. So they said to him, look, at the end of the day, you're getting 136,000 discount. Either you go with the valuation we've given you, or you walk away. And because, you know, obviously, yes, it was 35,000 more, but they were getting a discount of 136,000. They kind of said, okay, we're getting 101,000 more than, do you know what I mean, difference. So in the end, they went ahead and bought the property. Where are we? What happened? Can my family help me buy my council house? If so, how? Right, so there's this thing called a joint borrower sole proprietor. Now, what this means is, joint borrower means more than one borrower, i.e. more than one person on the mortgage. And then sole proprietor means only one person on the deed, as in purchasing it. Now, there are a small, tiny handfuls of lenders that will do this, but there are certain criteria, and it really is quite technical. So it's something that, if you can DM me, I can look at your case individually and see if you meet that criteria. Do you need savings for a deposit, or does the discount cover it? again, yeah, the discount, you can use 100% of the discount depending on which lender you select, and that can be used as the discount. Some as the deposit. Sorry, some lenders will only want to use 95, etc. But it's there up to you. What is the Section 125 notice? I don't know what to do after I get it. Okay, so with the Section 125 notice, that is kind of the offer notice. So what it says is, you'll get a letter and it obviously says the address and all of that good stuff. But what it also says is, this is what the market value of the property is, this is what the discount is, this is what the PP is, the purchase price is, and that should give you all the information. But again, I do have checklists that I will put, if you go into the link in the bio and have a look, there will be checklists that are available to you that will say how to check your Section 25. I've even got a course on how the whole right to buy works, so check those out if that's something of interest for you. How long does the right to buy process actually take? How long's a piece of string? No, I'm only joking. No, so basically, yes, there's the 4 to 8 week windows of once you do the RTB1, the original application, to Section 125, but because there's a massive amount of people that applied because of, the government announced it with only a couple of weeks left, everybody seems to be having delays. Some councils are really automated and they're whizzing through it, others aren't, so it really does depend. But at the end of the day, you can do the RTB6, if you're saying, there's a delay or whatever, but then all they have to do is send an email saying there's a delay, we'll get to you. And apparently the RTB6 is null and void at that point, and you'll get an RTB7. But then once you do get the Section 125, then they give you 12 weeks to sort of get your mortgage in. Some people are saying to actually get the mortgage, to get the mortgage offer, and then other people have been told it's complete. So the way the mortgage process works is, once you find the mortgage you want, you obviously apply, and then they do another valuation, not a right to buy valuation, but a lender's valuation, and that can be either a valuation, a home buyer's report, or a full structural. And then once you've done all that, then the underwriter will review your documents and things like that. And then you go to exchange completion, you involve your solicitor, conveyancer, and then on completion is when, it all finishes. Now, some are saying that needs to be 12 weeks, and some are saying just mortgage offer needs to be 12 weeks. So you need to check your Section 125 or get your mortgage advisor to check your Section 125. And then you also need to talk to the council and get all of that confirmed. What I would say all day long is email. I would always ring the council if you're confused about anything, because so many councils are differing in the way they do it. And then once you get someone on the phone, and I know that's easier said than done, you talk to them, and you talk to them, and then at the end of the day, once you've spoken to them, follow it up with an email just to confirm. Right, so I've got quite a few. I think that if you buy it out, can you sell it straight away? Right, I've got 2 more questions on right to buy, and then I'll go back to the questions. So with the council, there's a pre-exempt period. So it will say on the Section 125, you can't sell, do anything with it for 3 years, 5 years, whatever it is. Each council has different. The average is 5 years. So normally after that pre-exempt period, you could sell it, or you could change it into a buy-to-let, use some of the equity in it and buy a residential and have a buy-to-let, so you've got passive income, which is always a good thing. You can sell it on, buy somewhere else, you could sell it on, maybe split the money, buy 2 properties, whatever you want to do, but you can't do anything if you're still in the pre-exempt period. What can I do if my council delays my right to buy application? I think I've kind of gone over this, but it's a Section 6, and then you put in and say, there's been a delay. Right, so I've got first time buyer questions, but I will look at my comment questions for now, and then we'll go with that. And as I said to everybody, I don't know when people are joining, but basically when I finish with this, the TikTok will have highlights, but my YouTube channel, which is also called Manda Mortgage Coach, will have the full we'll have the full live recorded. So it'd be great if you could go on my YouTube channel, check out my videos, check out this live, subscribe as well. I could really do with the support to support my channel. Thank you. And means I can give more free content like this. Right, I'd like to get a mortgage, but I don't have a deposit. What are my options? We've talked about that. I'm looking to buy. Yep, we've talked about that. What do you recommend? Talked about that. We've talked that. I've put in for a mortgage with my dad. He has paid his mortgage off. Will we still be eligible? I don't actually see why not. It depends. I'm not sure if you're talking about right to buy, first time buyer, or just a general mortgage. But generally speaking, if he's paid his mortgage off and he's coming on with you, is he coming on as a joint borrower sole proprietor, or is he coming on as a joint mortgage? I'd probably need more information. But again, obviously you know who you are, who sent this. Please just DM me. What I tend to do is when people DM me, I give them my phone number, and then we go on WhatsApp and organize schedule a time to do a call, and then I can give you a bit more information about your individual case. I can only kind of answer these things generally. We've just completed our mortgage application. If the range changed, can we change the mortgage? No date yet. Yes, you can. It's a shame you didn't go with me to do your mortgage, but I understand if you want to do it direct. But yeah, you can. You absolutely can. What basically happens is if you put in a mortgage application, even if you get the mortgage offer, as long as you don't accept it, you could still change it right up until, you get to exchange completion and all that good stuff. So if the rate changes and you want to do it, the only thing I would say is if you've already had the lenders, the mortgage application valuation, then you will not get that money back. So if it was included, then you're all good. If it wasn't, then you've lost that money. If it was included, read the small print, because they may charge you if you pull out at this point. I don't know if rates are going to change. There's different schools of thoughts at the moment. I'm hearing rumours that because of the Bank of England rate may be going down in order to help with inflation, but then the swap rate, which is the rate that banks borrow money at, because not every bank has enough money to cover all the lending it's doing, those are actually going up. So it really does depend. It's a case of watching this space. I mean, the government obviously also affects the Bank of England rate. And if they, are trying to sort of make up for the fact that they're, mucking around with the stamp duty and they've done this stuff with the right to buy, they may try and bring the Bank of England, encourage the Bank of England to bring the rate down, even though the Bank of England are meant to be independent. They obviously are influenced by the government because it's the government. So yes, you can change your mortgage before, but once you get to sort of exchange time or you accept your mortgage offer, then obviously there can be some kind of fees, and if you're already in the mortgage, there's early repayment fees and things like that. So either DM me and we can talk about your individual case, or if you've done it already with a mortgage advisor, then speak to them. That's not a problem. We've got our RTB2 back, but the date says they received it on the 26th of November, but we applied on the 17th. Ouch. What proof have you got? Yeah, I feel for you. Yeah. I mean, when you applied, I was saying to people, get it date stamped. If you apply online, do screenshots, that kind of thing. I'd argue it. I mean, you've got nothing to lose by arguing it as much as you can. I'm really sorry to hear that. Do you think they will try and get out of the old discount? Yeah, it sounds like this is comment from the same person that applied on the 17th and they're saying it's the 26th. Yeah, absolutely. That's what they're trying to do to you. So argue it as much as you can. Right. Me and my partner are likely to get a mortgage. I'm nearly at the end of my unpaid teacher training. Do you know what? When I'm actually applying for mortgages for people, like I've done it for people that had just left university and they actually have an offer letter. I've done it for nurses who are in training and they already know what hospital they're going to be working at. And basically, what has happened is I've applied for the mortgage based on the offer letter of the new job. And I've said, this is a first time buyer. They want to buy in 2 months' time. They are going to have a job and this is going to be their income. It's their very first job. And as long as you find the right lender, they will say to you, okay, this is fine. And some lenders have said this is fine, off you go. Some lenders have put in, so when you get the mortgage offer, as a condition of the mortgage offer, they're like, you cannot complete or exchange, depending, some will say different things, until you've got at least 1 month's pay slip. So if you're saying you've come to the end of your unpaid teacher training and you've got a job lined up, then it's great. If you're saying, it depends what you're saying. It really, really does. But those are the options normally. What can I do to speed up the purchase process? Need things to speed up? It depends what stage you're at, but normally, if you're in the position where, you've got a mortgage advisor, then you obviously chase them. If you're in the position at a mortgage stage, then, you're either chasing the lender or chasing the mortgage advisor to chase the lender. If you're at the conveyancer solicitor stage and you're trying to get the legals through, try and be on top of them. I think whoever you need to speed up, be on top of them. Right to buy ends 24 months ago, 3k total. Am I likely to get a high street lender? I think on this one, with the right to buy ended 24 months ago, am I likely to get a high street lender? I'm not. Are you saying your right to buy mortgage ended and you're on a remortgage, or I'm not sure what you're looking to do? It says 3k total. Is that how much you owe outstanding? I mean, would you even want a mortgage? Could you get a personal loan to cover that? I'm not 100% sure what you're asking me, but as always, I am really accessible. Just DM me with the question or ask me for my number so you can give me a call and we'll go through it in detail, because I'm not 100% sure what you're saying. Sorry about that. Deal with it. Right, yeah, I'm not allowed to talk about specific lenders within the chat, unfortunately. But if you're saying, that's the rate you're getting and wait for it to drop, who knows? I mean, 4.1 is a decent rate at the moment. But again, I'm really not meant to talk about lenders or rates. It's just part of the Financial Conduct Authority that we're restricted to. But I can. So I can't talk about over a live like this, but if you DM me and I know your actual circumstances and I'm giving you, one-to-one mortgage advice, then I can comment on that. So I hope that helps. But I have talked generally about where I think rates are going to go, and no one has a crystal ball, so we can't guarantee everything. But all we can do is do our best. The council doesn't want to come and value my property. The council doesn't want to come and value my property in person. They want to do it without a viewing. To be honest, it could go either way. I mean, if you've done a lot of stuff to your property and you don't want them to value it higher because of stuff you've done to it, then you definitely would prefer the scenario where they don't even come and see it and they just do it based on a shell. But at the end of the day, you can go to Rightmove, you can go to Zoopla, you can get a rough idea. You can even go to estate agents and see if they'll view it for you and kind of go from there. I have a receipt of when I took the application in. Okay. Well, then, yeah, just use that. Just absolutely use that to fight the 17th of November. Say you've got the proof, and definitely dispute it, definitely appeal it, go to Citizens Advice. If you want to DM me, I can recommend a solicitor that can also help you write a letter and fight it, whatever you need to do. I mean, at the end of the day, if you're in London, for example, that is a difference, you know, could be a potential difference of £120,000. So even if you needed to get a solicitor involved that cost maybe £500 to write a letter, I don't know, I'm not a solicitor, but I'm just saying, you know, if you compare 120,000 with £500, it's worth fighting. I personally would definitely fight it. How early can you get a rate if your fixed rate is coming to an end in June? It depends what lender you're with. So basically, it's up to 6 months. So what you could do is 6 months before your mortgage is going to end, depending on the lender you're with, you can actually put an application in for another mortgage, and you can say to them that I don't want I'm putting the application in, but I do not want to complete till the 30th of June or the 1st of July, whatever it is. And then that way, you have it and you've got it there just in case. And then in the meantime, you keep an eye on the rate. And if it changes, then obviously you could swap to a different deal, but you can actually secure a rate quite early. But what I would say to you is, because my assumption is whatever rate you secure now isn't going to be as good as the rate you're on, if you just think about how good rates were a couple of years ago. So you just make sure whatever option you do, and again, you can DM me and I'll do the mortgage for you, more than happy to do that. If you just make sure you tell the lender, you also tell the conveyancer solicitor when you actually want to complete, because they will automatically, as soon as you get the mortgage offer and accept it, they'll start processing that. But you just have to tell them the date when you want to do it, so it ends and it does it simultaneously, ends and completes simultaneously. But you can definitely get the rate as early as you want. Well, not as early as you want, but depending on the lender, some are 6 months before, some are 4 months before, some are 3 months before. Right, so our RTB2s does not state how much the discount we will receive. No, the RTB2 is basically just to say you're eligible or you're not. It's the section 125 offer notice that will give you that information of what your discount is and that kind of stuff. Sorry. Linda. Mortgage lender requested a timber damp report after valuation. Should I be worried? I wouldn't worry until you know more. They're just trying to get as much information as they can. So I definitely look into that. But there's a lot of properties that have damp, unfortunately. It's just the way the cookie crumbles. But yeah, it's best to, when it comes to property, it really is best to, I've always had a full structural survey with all of my properties, because I just believe properties are hundreds of thousands of pounds and it's worth knowing exactly what you're buying. How early can you get the rate? Right, we've already talked about that. Yeah, your lender will know. On how early you can get the rate. Different lenders have different criteria. I'm not even lying to you. So some it's as early as 6 months, some it's 4, some lenders were like 6 months adamant for years, and only recently changed it down to 4. So you really do need to get your mortgage advisor to check that detail, or you can check directly yourself. Right. Yeah, when it says your question about commercial property, I only deal with residential. Next question. I'm in the position where I'm waiting to hear how much my property is worth. Cool. I hope that all works out for you. Yeah, you can do additional borrowing. Right. So let's give an example here. So say your property is worth 300,000 and you're getting 100,000 count, then how embarrassing, can't think what 80% of 300,000 is. 300,000, okay, so that's 240. So Right. So in example, so say the property is worth 300,000, you can borrow up to 240. Now, if you've got a discount of 100,000, that means your mortgage balance would be 200, but you can borrow 240. So in essence, you can borrow additional 40,000, but it is purely based on one, obviously the value of the property, but two, more importantly, your affordability. If you can't afford a 240k mortgage, then even though you can borrow that much, it won't allow it. You do need to find the lenders that will let you do right to buy with additional borrowing. And I'm assuming you're talking about right to buy for home improvement. And we're having additional lending for home improvements. Will it make your mortgage rates go up much? Do you know what? Not much, but it will increase, because obviously when you're looking at interest rates, they lenders want to reduce their risk. So what they do is, if your loan to value is like in the 60 percentile, they're like, do you know what? The chances are, if anything happens, we could definitely get our money back. If it's in the 80%, yeah, you're doing home improvements, so that's going to increase the property anyway. We're good, 80% are. But then obviously when you're going with 90% mortgages, 95% mortgages, even 100% mortgages, lenders are like, right, we're going to give the highest interest rate we can because there's more of a risk. So if you are genuinely doing additional borrowing for home improvements, you're going to increase the equity on your property. So in the end, by the time you finish your mortgage, the mortgage deal, not only will the loan to value have changed dramatically, because one, you've done the home improvements, your property would have increased in value. So say if it was a 300k property and you've put now 40k into it, you've probably increased the value of it by maybe 50 or 60,000. And then you've been paying your mortgage for, whether it was a 2-year fixed or 5-year fixed, all that time, maybe making the 10% overpayments that some lenders will allow you to do. So you've actually been paying, your balance has been going down because you've been paying it. The market value of the property has probably been going up because, one, you've done it up because you've done the additional borrowing for home improvements, but then properties tend to appreciate, double in value every 10 years, that kind of scenario anyway. So in all intensive purposes, when you come to remortgage the next time, you'll probably be pleasantly surprised. Hope that makes sense. Right, lender's request. Okay, we've done that. It didn't include. Right, yeah. I mean, at the end of the day, I think I don't know as much about when it comes to, you need to have been there 3 years and introductory periods. That's something that you will need to talk to either Citizens Advice, a solicitor, the Right to Buy housing team, and people like that. That's kind of a little bit out of my scope of expertise. Okay. Yeah, I'm at the ID stage for bank statements ID, so that makes sense. Yeah, there are a couple of lenders that will do prefab houses. So yeah, it is very specific, and they want to know, yeah, is it concrete? Have you done the repairs and that kind of stuff? If you haven't had the repairs, I think it is very difficult to get. It's a lot easier to get it if it's a prefab with repairs done. Um, Right. So a lot of people ask me this. So they're saying, I've got a mortgage. Yeah. I mean, to be honest, putting your earnings in, maybe it's best if you just DM me direct rather than, tell everybody what your earnings are. And then we can go from there. But generally speaking, I mean, yeah, the good old days, it would be 4 times your salary. So 30k would be 120k. But unfortunately, that isn't the case anymore. It is your affordability portfolio profile. So what I would say is, one, please don't put it in the chat. It is your personal what you earn. So just DM me and we can go through it. But generally speaking, what it would be is we'd look at your income, then we would look at if you had any kids or any other credit commitments, credit cards, loans, car finance, buy now, pay later, Klarna, all of that. They're all committed expenses. Once we've plugged all of that in, have you got any CCJs? Have you got anything like that? And we just go from there and just work the whole thing out. Um, uh, uh, if it's within the amount you're able to borrow, can you borrow extra? Yes, you can. So additional borrowing for home improvements, yeah, definitely. If you're talking about right to buy, if you're talking about a standard first time buyer mortgage, not so much. Can you get an auction property? Yeah, you can get so an MIP is mortgage in principle. It's also called arrangement in principle, decision in principle. So based on your income and your credit commitments, you can plug it in or get a mortgage advisor to plug it in, and they'll give you a dip, and you can actually take it to the auction house. With the some lenders, the service levels are coming back within a couple of weeks to get a mortgage. So you need to tell people up front that it is an auction property, because once you win the auction, you put down 10% normally on the day, and then you've got to come up with a 90% within 28 days. So you need a lender that can move quickly. Sorry, thirsty. Right, no pairs. Right, so let me go. Right, so how much deposit do I actually need as a first time buyer? So as I said, there's 100% mortgages, but you can also have 20% is ideal, but obviously it's not always realistic for everybody. So 5-10%. To be honest, when people are asking me a deposit, I always work out what they can afford, and then I tell them, based on what you can afford, a 10% deposit would be this, a 20% deposit would be this, and then that way they can decide how they're saving. I did a whole getting money savvy in 2025 quiz, which is in my bio, and that gives a lot of tips on saving and things like that. And I am planning to do videos this week on how to save for a deposit and things like that. Are there any schemes to help people like me on the property ladder? Right. I'm not sure. I'm so sure what they mean by like me, but there are a couple that are a bit quirky, shall we say? So there's the joint borrower sole proprietor. So say you're a first time buyer and your parents might be able to go on the mortgage with you for affordability, and that's good. Parents might be able to put on a second charge on their, which helps you with deposit. So if you have affordability issues, there are mortgages. If you have deposit issues, there are mortgages. It really does depend. There's even a mortgage called buy for uni, which is when it's a buy to let scenario. And if you're a university student and you want to buy a property while you're at uni, which is a lot cheaper than going for halls of residence and renting for all that time, those mortgages can be 100% mortgages, and they're based on rental income. So say you could buy a 3-bed property, you live in 1 bedroom and rent out the other 2. So students can buy properties. So that's also another quirky one. What's the deal with leasehold and freehold? So normally houses are freehold and flats are leasehold, because leasehold means that you're leasing the land it's on, you don't own it, and you lease it for whatever period the length of the lease is. While you're there, you pay service charge and ground rent. If you are going to buy a flat, I'll always recommend a maisonette, which is half of a house rather than a flat in a block. How do I figure out how much I can borrow for my first home? Again, as I said, that's how the affordability works. You have to look at income, you have to look at your committed expenses, if you've got any children, all of that kind of stuff, credit cards, loans, car loans, Klarna stuff, buy now, pay later stuff, all of that. How can I improve my credit score before applying? Right, I've done a whole thing, and there's a guide and everything in in the bio that explains how all of that works. But generally speaking, you need to be avoiding missed payments, late payments, review who your financial associates are, make sure you're on the electoral roll, even though if you opt out to vote, but you're on the electoral roll, so they have your address history. Make sure that your credit utilization is about 30%, make sure your debt to income ratio is 50%, and things like that. What extra costs would I expect as a first time buyer? Right. So when you're a first time buyer, consider stamp duty. Just so everybody's aware, if you're buying a property that is over 300,000, then you need to so if your property is say 425,000 and you complete by the 31st of March, then you don't have to pay stamp duty. But from the 1st of April, the stamp duty exemption goes down to 300,000. Stamp duty is the tax that you pay as when you purchase a property. The other costs are obviously moving costs. Then you've got valuation, survey. There are 3 types of surveys. You've got the full structural, you've got the home buyers, and you've also got the valuation. You've got the legal fees that are also involved as well. So those are some of the costs that you need to expect. Also, first-time buyers seem to always forget utilities, council tax, things like that. If you're living with your parents and then you're going to move out, these are all costs that you need to kind of get used to. A lot of people work from home, so they need to make sure they've got decent broadband and things like that. So that's all good. Can I still buy a house if I have bad credit? Depends what you mean by bad credit. So, at the end of the day, it really is worth you working on improving your credit. And again, look in the bio. I do one-to-one sessions to help people improve their credit. I also have improve your credit guides and loads of stuff like that. I do have a right to buy guide. I do have a valuation. A lot of people have been saying when their property is going to be valued, they're a little bit concerned. So I created a whole guide on that. So if you look in my bio and you find it, it is basically right to buy checklist guide and that kind of stuff. Is it best to go for fixed rate or variable rate mortgage as a newbie? Right, I would say fixed rate all day long, because with a fixed rate, it is fixed. So you will know month in, month out what you're paying. As a newbie, if you're not used to paying rent or any sort of fixed cost every single month, this will help you budget. Variable, depending on what you think the interest rate is going to do. If you think the interest rate is going to go down dramatically, you might want to go on variable and then change it to fixed rate when you can. You might want to consider tracker, because a tracker will track to the Bank of England rate. Variable rate doesn't necessarily track to the Bank of England rate. The variable rate can be whatever the lender, that particular bank, wants to be its rate. So even if the Bank of England rate goes down, the lender may still decide to keep the variable rate where it is. But then on the other side of it, if the lender, for example, wants to get more business, like it's a small building society and it wants to get as much business as possible, then if it's on variable rate, it may reduce it quite dramatically to get more customers in, even if the Bank of England rate goes up. It's only the tracker that is linked to the Bank of England rate. The variable rate doesn't have to be. And what was it? Should I go for a new build or an older property for my first home? It really does depend. You really need to do your research on this. And again, I'm going to be, there's quite a few guides that I've created that I'm going to put in the bio as of tomorrow that you can actually have a look at. And this is one of them: how to actually value a property, how to review the property when you go for viewings, what to look for, that kind of thing. It's kind of, I've also got a full first time buyer guide, which has loads of information in there. And it does have a supplement section that's right to buy. So I'm a sole applicant. Save. When sole applicant, partners saved, so they would give that to you as a gift. I assume you're not buying with them. So that question is about your partner saving the deposit, but you're a sole applicant. Now, If you're the only one buying and they're gifting it to you, then you need to find a lender that is happy for you to receive gifts from your partner. You've said partner, not husband or wife. Now, some lenders will only let you gift a deposit, receive money from someone to give a deposit if firstly they are a blood relative or not, it's husband, wife, whatever it is. You really need to find the right lender that will do that. And again, just DM me and we can talk. Um, right. So, do you help people with bad credit? Yes, I do. Um, right. So, my mum's received the application saying that it's been approved. So, that's the RTB2. The next step is valuation. And then the step after that is obviously the section 125. But again, I do have a right. So by all means, go and check that out. Go into the bio. As I said, there's a lot of courses and things that I also do that are also available to you. So thank you so much. I will be doing more lives throughout the week. I think it really does need to help you. For you to get in contact with me, just DM me. So either put if you're on TikTok, you can actually just DM me. If you're not on TikTok and you're on YouTube, don't forget to subscribe. I can really do with the support, so I can keep my channel going and give out more information. And then any questions that I haven't answered, just put them in the comments of any of my videos and I will get back to you and I'll do mini videos on them. That's not a problem. So just watch my other videos on TikTok and put comments in them and I'll answer it. Not a problem. On If you need to get in contact with me, as I said, DM me or put in a comment that please get in contact or something like that. Obviously all these comments will go because the live I'm not allowed to post. I can't post the whole live up there. It will just be highlights. So yeah, okay, take care and have a good evening, guys. Okay, please, please, please do not forget to subscribe. It really, really does help support me. Thank you.